Hi guys, LBFX here. So just going to go through, on bar replay, how you could have basically played September, which starts up here, 3rd of September, and obviously ends, down here, 30th of September. I'm going to do the 4 hour, I'm going to do the 15 minute. And yeah, hopefully you get some value from this. So let's get into it. So if we just cut price up here. Right. So, one thing to note, right, is with going back onto the FTMO situation or funding, right, you literally need 10% in a month. So you have this whole data that we're about to go through to make 10%, right? Now, the beauty of trading is we're always trying to develop, we're always trying to advance, and we are always trying to, I guess, in somewhat get better, which is great. And obviously then you go down to the lower time frame entries and seconds and whatnot, but you don't actually have to, right? If you've got a good read of the narrative overall on a higher time frame, and you know a pair, which is why we say just focus on one pair. You don't need 5, 6, 7 pairs. Obviously, if you like that, then that's fine. But for me, one pair is more than enough. It gives you enough opportunity. You can kind of see the similarities and the things that happen over and over again, and you can start to piece them together as confluences with other things, right? Now, I'm going to try and detail this best I can, but also not give away absolutely everything, of course. But I will give away enough that those of you that want to trade higher time frame can kind of look to implementing this further, right? And obviously, if you want to learn the lower time frame stuff, then I recommend joining Phantom. Again, I'm not plugging. I'm not saying that's what you've got to do. It's just that obviously I'm trying to do this to help people, and at the same time, I want to help people, but obviously understand it's a lot of effort and time has gone into this to get to this understanding. So I'm not going to just go and throw it all up on YouTube. But yeah, let's get into it. So what we can see, right, is this is our current 4-hour leg. Let me just mark it out for you guys. So if we look at this as our whole range 4-hour leg, whatever you want to call it, notice how we've just taken out these highs here, but we've only wicked them. So that tells me that likelihood is we may see a reversal. It literally wicks it by 0.4 of 4 ticks. So it's very, very minor. And at this time in demand is in control. We're putting in high, high and high lows. Overall, yes, we're pretty bearish. But nonetheless, we've had this bullish run, which is more like a complex pullback. We've taken out structural liquidity up here, we've taken out ERL, and now we could see a sell-off, right? So if you're looking to do this on your own kind of charts and whatnot, first things first, right, is you want to see some kind of commitment from the 4-hour. So if we're just basing this on the 4-hour for now, I'm just going to play price on. So you might not trade this day, right? You might be chilling. This demand here, notice how it fails to create a new high. So it's like, okay, we might be starting to see supply and bears taking control. We then get this kind of like bearish change of character. We take out this high, we take out this low. Change of character is simply, we're looking at it as the first sign of a trend change. I see people going around saying, oh, it's boss, oh, it's a fancy word. We're not using it like that. The reason we call it change of character was simply, it was just something a little bit different and it has a different meaning to us. I know it's a Wyckoff methodology. So anyone says, oh, it's this, it's that, it's not. It's just call it change of character. When you put in high highs and high lows and you stop doing that, you start doing lower lows and lower highs, right? So right here, we've had our first sign of a possible trend change. And now it's a case of, right, okay, we could look to start getting involved in shorts. Obviously, just based off the 4-hour, we don't really have a bunch to go off. You've got these wicks up here, you've got this little guy here, but it's not a buy to sell candle. So I probably wouldn't be interested as of yet, but this is fine. Again, you don't need to freak out. If you do play those or you've refined it to a lower time frame, maybe a 30-minute, hour, 15, then by all means, it's completely valid, but I'm just focusing on the 4 for the minute. So, you may get involved here, seeing what happens, right? And then you get this push and you start to see bearish order flow kind of kicking in. Here's our first mitigation, right? And now we've come into this demand. So we've taken out this demand up here, there, and now we are taking out this demand down here. So let's see what happens. If we're going to continue this bullish trend, this demand should hold. So let's see what happens. And it fails, right? So now that it's failed, it's like, okay, right, well, what do we want to do? And this is where you can start looking to trade, because you've essentially had that confirmation. You've started to see supply getting control. We've had a huge amount of liquidity taken, and we're seeing demand levels fail. Now, if you know EU and you know how it runs and kind of the delivery of it, in theory, if we're seeing this price action after taking out this swing, likelihood is we are going to start taking out all of these levels of demand, and they will literally become reaction points for a pullback for us to then get in short, for a pullback for us to get in short. And it's simply following the trend, following the money, following the momentum, however you want to call it. It's simply following that until you take out this low down here. In theory, that's the low that should be failing, right? This is just due to price delivery and again, how we're seeing the markets. I'm not going to give all of that away. But if you go over data and you put the work in, you'll start to see the similarities of this happening a lot, especially once we take out some kind of structural liquidity. Okay, it happens to the left down here. We take out these lows. When you break a low or a high, you likely get a pullback. What happens? We get that pullback, and then we start taking out these levels of supply here, right? They don't become reversal points, which everyone's looking for straight away. All they become is reaction for us to get in long, reaction for us to get in long, reaction for us to get in long. Once we sweep the true high, if failed to close above it, then we're like, right, okay, you know what? Bears are still in control. We're likely going to see these levels of demand now fail. And you're just following that process, right? So if we're looking at this, you've got this 4-hour buy to sell. I would like to use this whole level here. Oh, wrong thing. I'd like to use this and include the wick. Again, I'm just using one time frame, all right? I'm not going any lower. So we could, of course, say at this point that, you know, we can trade from this now, okay? We've witnessed demand failing. We've had a demand to supply flip. This is the last area where we've had that flip. So now we are likely to see this get mitigated and then drop off. Yes, there's this above. And you might be like, what about this above? We get a mitigation here. So we've come into this range here, right? We've had that first tap of mitigation. This is the last buy to sell. So the likelihood is this is a level. If you know EU as well, it doesn't always come back to extremes. So that's a very valid level to trade from. So what you could do, you know, being at work, you could look at that. You could play the open of that and you could go, it's a 12 pip stop. It's a little bit large. Again, get data on this. You know what? I'm happy to play the EQ. So you could either play the EQ of this level, which then gives you a 6 pip stop, and you make sure your stop. I'd like it above this wick. So let's go 8 pips, 8.1 pips. Let me just change that. 8 pips. And in theory, like we said, you know, this should come and take this low out, right? So there's a 1 to 22. Okay. Now, again, if you're understanding narrative and you're understanding what's going on, right, regardless of where we know what happens, I've been calling these levels. If you're a part of Phantom, I've been calling this failing since it was up here. It's just about understanding what's going on in the market. Everyone preaches just focus on the 1 minute. No, you're an idiot. Like, you're a wombat. If that's how you trade, get in the bin. Like, it's not trading. You need to be aware of the higher time frames. You need to be aware of the narrative. What is price actually doing? Not, oh, look at me, I can find a buy to sell to buy in a 1 minute. I'm great. No, mate, get in the bin. Right? So if we play this on, obviously you'd have a limit sitting here. Mindful that down here, we've just mitigated this demand. It's likely just building liquidity, and it's a pullback for this mitigation, and then we will run through this liquidity. So see what happens. Right, so you get tagged in on the 4 hour. Let's say you've been at work. You could have set this alert, when is that, the 8th of September, and we're getting tagged in on the 10th of September. So, you know, you might have set this a couple of days ago. It's completely valid. This is the level we want to trade away from. Essentially, it's a strong high. It does its job, so we can happily trade away from that. And you get that nice, lovely little reaction. Now, if you're in here and you're not so confident to hold down here, at minimum, you should be holding it to take out these lows, because these lows fail to create a new high, so they're a weak low, right? So in theory, it's a 1 to 5. It's still great. People struggle to get that a month, right? And you've done that chilling at work. Bang, you've hit your 1 to 5, right? Now, overall, I would still hold a large portion of this trade, especially for trading from 4 hour levels, because in theory, we should be looking at these lows, right? Just due to what's happened, again, looking back at previous data and having an understanding in the markets, we are quite aware that these demand levels will just be reaction points. Like this one here, you can see we've had a reaction. Oh, it failed to create a new high. It gets taken out. So what do we have now? We have another level that we can trade from. We have this buy to sell here. Let me mark that as a supply for you, actual supply. So we have that buy to sell there, right? So what you can do now is we can look to say, okay, well, we could probably look to take shorts from here still and just start loading up on our positions. One thing you'll notice with EU is you get sort of 2-3 taps of a mitigation, and then it just goes, right? So you could say you've had these guys have obviously mitigated here. You've had these here. You might get another one and possibly another one, and then it won't come back to the 4-hour specific supply or demand level. It might just come back into the range, and then it's just going to go, right? So remember, this is over a month, and you need to get probably one of these a month, and you would be chilling. The problem is, even when I do this, right, I look at this example and I'm like, oh my days, like if I just traded like this, although I love how I trade and I make some good profits, I'd have a much easier life if I just traded like this. But this doesn't just come, right? You have to put the work in for this. You have to understand that. But what we're not doing is we're not looking for reversals, because it doesn't make sense to look for reversals. And if you are, you need to be aware you're playing a pullback. Until these supply levels start to fail, supply is in control, right? We're going to start breaking swing lows down here now, right, of this current leg. So it's just game on to get involved and take short positions, okay? So if we then say to ourselves, you know, oh, I'm happy to load up on this. Again, you need to test whether playing the EQ, whether playing the open, what works best for you. Obviously, the open of this would be like 26 pips, which for me personally is far too big. In theory, it shouldn't break this high. So we could go 13 pips here and just play the 4-hour. And again, if you're getting tagged in this, you should be targeting those lows. Here's now a 1 to 12. Okay, so if we play this on, you can see how we've come into demand here, into this like demand built range, and we've had a reaction. Okay, so the reaction has caused this pullback. Let me just move this over for you guys. Like this, and make this a bit smaller. I really don't like messy charts, so bear with me. Right, so now you're getting tagged into that. Maybe you had that limit on for a couple of days, and you're like, right, you know, I'm in, I'm at work, my alert's gone off, I'm in. You know, you need to figure out management. I would say likely when you start breaking real levels of structure. Obviously, if you went break even here, you've got to prepare that this has created a future mitigation. So the likelihood is it will come to retest. You might have got BE on that. So personally, I wouldn't, when you're trading such large levels, you need to give them real breathing room. Okay, so now you're getting in here, minimum, this is your target, this low is weak, this low failed to take out this high. We're now seeing bearish order flow come into the market, and we're building this kind of demand's failing, supplies in control. So the last thing we want to be doing is trying to long this or cutting this trade short because we get a little pullback, right? At minimum, should take this low. And if you look back, if when we spoke about it and we said minimum, that should take that low, there's 1 to 5, there's 1 to 5. So in these two trades, there's your FTMO, there's 1 to 10 if you're risking 1%, okay? Like, that's it. It can be that simple, right? Overall, though, I would be trading into these lows. So let's see what happens to get tagged in. Like I say, you're going to get retests, you're going to get pullbacks. You just need to have faith in your analysis. And obviously, we've taken out this low now. So we are expecting, we could see a deeper mitigation. We could see price come up here. But price also, after doing this, we pushed out of it. We came back in, we mitigated this, and then we've built this and dropped. This is kind of like 1 tap, 2 tap, 3 tap. I'd be very surprised if we actually came to mitigate this. Likelihood is, as long as we tap the bottom of this range, which is the overall 4-hour range, as long as we come into here and you compare it with something on the 15-minute, you can look to take this short and continue to just follow this trend, okay? So we've taken 2 trades and just play this on. So we're getting a little pullback. Obviously, you've got these buy to sell wicks within here. You could, again, gather data on these and say, am I happy to trade directly off these levels? They are a supply zone. It is now in the 4-hour range. So by all means, you're in 2 very well position trades. You could look to take this quite a small stop. Obviously, I'm literally on the 4-hour, right? I'm not going any lower. I don't know what's here on the 15-minute. We might induce something to mitigate something higher. But you know what? For the sake of the video, let's just put this trade on as well. Let's see what happens. So we're in these 2. We put this one on down here. It's very low in the leg, but let's see what happens. Boom, right? We get taken out. No problem. There's likely going to have been something here on the 15, which we compare it with. It's fine. You're in these 2 trades. You take a hit here. But now you're running at 8% and 14%. So I'm not being funny. That 1% means nothing. It doesn't matter. Okay. And there we go. Right. So if we get rid of this loss now, we took a loss here. Cool. We now have this buy to sell range again. So we could, of course, look at this here. I would include this wick. This wick takes out liquidity. Of course, you can just use this buy candle, and you can make more sense of it on another time frame. I'm just trying to stick to the 4-hour at the moment. So here, so you could look to trade from this. Obviously, again, it doesn't always come back. But let's say, again, we've played the EQ every time. So let's play the EQ again. Like a 9 pip stop, 9.3 pips, should be targeting the lows. It's a 1 to 12. This is still September, by the way. It's still 1 month. See if she comes back for us. I think we just come back into the bottom of this range and we go. Yep. And then obviously from here, if I just go back a little bit for you guys. Oh no. So we've not mitigated that. And again, the reasons behind that will be something on a lower time frame. And of course, we've come into the bottom of this range. Notice how the first one here doesn't quite make it into the bottom of the range. That becomes inducement for the range above. Once we tap that, pair that with the 15M and you're away to go, right? So now we've seen that, we're thinking, okay, well, you know, it likely won't come up here. EU doesn't always come back to the extremes. As you can see, just go back over previous data, right? So in theory, if it doesn't come back, then what we can do is we can look to trade from up here. This, I'd use just this wick just because it takes out all these, all this liquidity. It's a strong high because it's now broken a low. So I'd look to trade directly from that. And again, you can just go EQ and you can say, I'm happy to place my order here. And we're looking at what, 11.5, let's just go 11.5 pips. Again, we're just following the trend here. We're not trying to reverse it. We're not trying to spin it on a dime and get insta clout. We're literally just trading, right? We're being professional. We're busy at work. We have a busy life. This is more than manageable. Just look back left off this leg, right? So here we go. So we get tagged in there. Again, you've got to prepare. You know, I know these are 4-hour candles. It's never nice price just sitting in your area, but understand the levels you're playing. You know, you're going to have to deal with that. I mean, these are still small stops. 11 pips, 13 pips, 8 pips. People play this on 15 minute, right? These are still tiny. That's why I love EU. And ultimately, it should break the low. Boom. So we took trades on the 9th of September. And by the 29th, so 20 days, you have done 22, 12, and 7%. Quick maths, we got what, 34, 41%-ish, right? So it's 41%. Now I know on a live FTMOs, obviously, unless you've got the swing account, you can't hold trades for that long, that kind of period, which again is just how it goes. But what you could, of course, do is manage these on the basis of when's the weekend and, you know, just get out. Obviously, if we've just targeted this level, let's say you targeted that low there, that's 6%. Targeting that low there, that's 5%. Targeting that low there, that's 5%. So there's 6%, 5%, 5%. You're looking at about 16, 17% there. And that's when you're live. Remember, on the challenge, you can hold trades, right? So you don't have to worry about getting out of them. Just ensure you're not building bad habits for when you, of course, go live. But yeah, that's literally it. Like, just following the understanding of a higher time frame narrative, right? And this can be so easy. These alerts and these orders can be set, you know, days in advance, and you just wait. Obviously, when you're live, like I say, you might have to be a little bit more realistic with targets. But remember, FTMO is just a wealth tool, or any prop firm is a wealth tool to build a big personal, to then be able to have, you know, if you've got 6-figure personal, you'll be chilling, you'll be flying, right? So then you can focus on that personal and just grow that. And then you can hold trades as long as you like. Of course, you're going to get swap fees and whatnot. But again, you know, depending on your broker, sometimes you can get positive swap. So if we're looking at it like this, you know, that 10% that we're all fantasizing over day in, day out, you don't actually have to do day in, day out, right? You can literally do it over the course of, you know, a couple of days, a couple of weeks, or almost a month, you know. Again, remember, this is just, I've literally gone on one time frame, right? I normally pair the 4 with the 15, and I can tell you now there is, I think I went back through it, you know, with realistic targets. There's nearly 1,000% in this leg when you're pairing it with like 1.5, 2 pip stops. I am conscious of time, and I've gone over a little bit. So what I'm going to do is I'm going to dangle that carrot, and I'm going to do the 15-minute stuff next week. So gives you guys time to look at this stuff, get your head round of all this. And then next week, I'm going to go over the 15-minute stuff and the same kind of concepts, so I can really, you know, hone in on them without taking up way too much time, and keep trying to keep the videos realistic and not, you know, silly times. But again, don't just think, oh, God's sake, I want the 15-minute stuff now. The 4-hour still works, you know, even if you look at these levels here, right? But don't get me wrong, there are points where, you know, it doesn't always come back. okay? But as soon as we take out these highs, we're likely to get a pullback again. So in here, we have this mitigation, right? Fine. So we have that mitigation. Again, we're just using the 4 hour. We then take out these somewhat equal lows and we have this sell to buy, right? So you could say to yourself straight away, okay, cool. I'm going to trade this demand, right, at EQ. And again, if you're getting in this, in theory, we should be holding it to the high, right? So you get in here with a 15 pip stop. It's not that bad. And that is on the 27th of August, right? And you should be targeting that high, which gives you a 1 to 10, right? So you get in there, you're in this trade, pushes away nicely, doesn't come back for anything here. Again, 15-minute, it may well. And then all of a sudden here, you know, you take out this high, you have a pullback that takes out some liquidity, you get your sell to buy, comes back and you get your mitigation, right? So you can just play the whole sell to buy level here, play this guy, and we can play that there. Look at the precision on that. It comes back for the EQ. It uses the first mitigation as a point of inducement. Remember, I've spoke about before on not trusting the first high or low. This is a great example of that because the first high or low comes in, fails, gets swept, and then we have the true move. If you get in here, again, put your stop below the low. We're looking at 11 pips, and you target the high. There's another 1 to 10. And down here, you don't really get much of a reaction until it comes back and it's just a reaction point because at this point, we've taken out structural highs and now supply has started to take control. But even on another month, from the 27th of August to the 3rd of September, which isn't even that long, there is 20% just using the 4 hour. Go over the data, start to understand it. Go over all of this up here. Look, straight away up here, you can see the same thing, right? We take out this liquidity, we mitigate something. Go and check what we hit, right? Likely going to be some kind of daily level within this or this 4 hour level, right? You've got your 4 hour buy to sell. Price comes into that. Wait, don't try and get in on the first mitigation. Let it show you that it wants to develop, right? Cool, it takes out these lows. What does it do? Well, this high took out liquidity and broke swing structure. It created a future mitigation. It's a strong high, right? Trade away from a strong high, trade away from a sweep. So here's your first entry, right? You can get in there with confidence, happily. Okay, so let's get in. So there's our buy to sell. Do we get the EQ mitigation? Yes, cool. So you get in here. Stop above that high, 13 pips. At minimum, you target that low, which is a 1 to 9. But in theory, from what we understand, all these demand levels should fail. They're just reaction points. So you could hold this, again, with confidence down to here. It's now a 1 to 42. Some people don't do that in a year, right? Remember and understand the power of this, okay? Because it's absolutely huge. I know it's a long period of time till it gets down there, but this is where when you have a big personal, these things can be huge. And this is why you also should have maybe 2 accounts, right? One for day, like intraday, one for swing. Okay, up here then, what happens? So we're in that trade. We then again have these guys here, which are our last mitigation. These mitigated this. This followed through and took out this low. That's our last level of supply. So we can play that comfortably. We do somewhat have some form of equal highs, which is why this does trade slightly higher. So you need to, again, incorporate that into your stop losses. But if we just take this whole level here and we put that at the EQ, I mean, that looks like quite a small stop. Yeah, 1 to 7, let's say, if you're covering a high and giving it a bit of room, it should take that low. There's 1 to 15, there's 1 to 9. And again, you can see how you had 1 tap, 2 taps, 3 mitigations, doesn't quite come back for the 4th, but notice how it comes into the bottom of the range and then we go. So you compare that with the 15. And honestly, like this happens so much. And if you were confident in these trades, all these demand levels are just reaction points. In theory, you can hold these trades down to here. And now you've got a 1 to 42 and a 1 to 70. And it does get there. It takes some time. We get in on the 1st of June and by the 20th of August, it gets there. It doesn't mean you can't have closed these higher up. And of course, that's just kind of passive income. If you've got in there and you leave and you're comfortable to leave full volume, I'm personally not yet, I'm building towards that, then you're laughing. This is just a way of potentially us gaining those FTMOs, us being able to leave the full-time jobs if that's what we want to do and still trade, right? I've gone through from June, I haven't even gone through this, and I've gone from June to like the end of September, and we're well over sort of 200% plus, you know, if you're letting them run. Even if you're not letting them run though, and you're just targeting the sensible levels, the next highs or lows, there's still 30-40% there, which is huge, right? So don't overlook that. I hope that helps. I hope that gives you an insight into how you could do these things at work. And like I say, providing this video, you know, is a hit and you guys want to see more, next week I will do the 15M version for those more on an intraday basis, those for more wanting more frequent trades, and for those who want smaller stops, more RR, the 15 minutes great, and you can literally just trade 4 hour 15 and you're laughing. And we'll go through the whole of September on the 15 minute and we'll see where we go. I hope that's helped, and I'll catch you on in a bit. Peace and love.